Most traders think a trend has changed after one strong candle. Gold drops hard. Everyone starts selling. Then suddenly price turns around and continues higher. The trader gets trapped. The problem is simple. A trend does not change because of one candle. A trend changes when multiple signs work together. In this lesson, I will show you a simple 5-step framework to confirm a real trend reversal on gold. We will use market structure, EMAs, RSI, volume, and higher time frame analysis. And at the end, I will show you a real chart example where all 5 confirmations align. Let's begin. Chapter 1, Market Structure. The first thing we need is a structure change. Let's look at this chart. Here we can see gold making higher highs and higher lows. This tells us the trend is bullish. Now watch what happens. Price breaks below the previous higher low. This is our first warning sign. But be careful. One structure break alone does not mean the trend has changed. Many traders make this mistake. Gold often breaks structure and then continues in the original direction. So we need more confirmation. Chapter 2, EMA Confirmation. Now let's add the 20 EMA and the 50 EMA. During a strong uptrend, price usually stays above both EMAs. The 20 EMA also stays above the 50 EMA. Now look at this chart. Price closes below both EMAs. A few candles later, the 20 EMA starts crossing below the 50 EMA. This tells us momentum is becoming weaker. Now we have 2 confirmations. Structure has changed. And EMA direction is changing. But we are not done yet. Chapter 3, RSI Confirmation. Next, let's check the RSI. Look carefully at this example. Price makes a new high. But RSI makes a lower high. This is called divergence. The market is moving higher. But momentum is getting weaker. Think of it like a car climbing a hill. The car is still moving. But it is losing power. When RSI and price disagree, we should pay attention. Now we have 3 confirmations. Chapter 4, Volume Confirmation. Now let's add volume. Volume shows how much activity is entering the market. Look at these highs. Price keeps moving higher. But volume keeps getting smaller. This tells us fewer traders are supporting the move. The trend is losing strength. Then volume suddenly increases when price starts moving lower. This is an important clue. Now we have 4 confirmations working together. Chapter 5, Higher Time Frame Confirmation. This is the step most traders skip. Let's move from the 15-minute chart to the 4-hour chart. Notice something interesting. The 15-minute chart looks bearish. But the 4-hour chart is still bullish. This tells us the move may only be a pullback. Now let's look at another example. The 15-minute chart is bearish. The 1-hour chart is bearish. And the 4-hour chart is also bearish. Now all time frames agree. This gives us much stronger confirmation. Before entering a reversal trade, always check the bigger picture. Let's review the framework. Step 1. Market structure changes. Step 2. EMA direction changes. Step 3. RSI confirms weakening momentum. Step 4. Volume supports the move. Step 5. Higher time frames agree with the reversal. When all 5 confirmations align, you have a much higher probability setup. Remember, A trend does not change because of one candle. A trend changes when the evidence starts stacking together. Look how the price confirms the trend reversal step by step. And I'll see you in the next lesson of the Advanced Gold Trading Masterclass. Subscribe if you want to learn more about gold trading. Thank you for watching.